All right, good morning, everyone. My name is Harry Ma. I'm one of the investment managers here at Sharewise, and welcome to another Sharewise webinar. Today, we are joined by Aurumin's Managing Director, Brad Valiukas. As per usual, the webinar will be recorded, so if you can't attend the full webinar, you can find it on our YouTube channel. A reminder for those that are interested in asking a few questions, by all means, drop your questions in the Q&A box at the bottom. But without further ado, Brad, over to you.
Thanks, Harry. Thanks very much. And thank you, everybody, for being here today and taking the time to listen. So, Aurumin story, we are West Australian based, we're gold focused and exploration with a strong focus on development. Usual sort of disclaimer for your leisure. Investment highlights, key things I'd like you to take away from today's presentation. We have clear focus on building a mining company. We've got a really good flagship asset at Sandstone, working around that. 946,000 ounces, plenty of potential to expand. We'll run through that as we go through, and a heap of legacy infrastructure and other value in place up there. Good board and management, plenty of operational and development experience, and a huge amount of previous market caps I think people can lay credit to. And anybody that's looked at us before, last year we had a pretty tough time. We had a convertible note from when we'd originally acquired Sandstone. We've removed that. We've divested our Mount Diamond mining tenements. We've got a royalty in place down there, which we'd expect to see come in the next 12 to 18 months. We've got a transaction with Mineral Resources on iron ore rights down there, which is still super close to finalisation. We've divested most of our Mount Palmer assets down there. 51% have gone to a company called Cooler Gold. They're earning in for the rest, and we'll get a free carry or royalty sort of at the end. And certainly at Sandstone, there's a little bit of iron ore potential up there. Talk about at the end, and it's pretty close to gold and not something we'd be able to avoid overall. Capital structure. This is the presentation we put out just recently on the ASX. So the share price is still there. We're down from that a little bit at the moment, around about 3.5 cents. So market cap closer to 15 at the moment. Board and management speak for 19% of the company, certainly heavily invested, and that's all shares that have been bought, generally well above the current price. Middle Island still sit there as a supportive shareholder at 9%. Previous owners at Sandstone, and they will definitely like to see that project continue. Collins Street Value Fund sit there at 15%, one of the bigger investors in the gold sector into junior companies at the moment. Other top 20, 11%, and really we have a very steady register down through most of that top 100, and then other holders down at 46%. I think we provide compelling value. So I said a share price a little bit below where it was just on the previous page. So EV now pick about $15 million, 946,000 ounces of resource on the books. EV per ounce well now below the 18 and closer to $10 per ounce US. So really talking about cents on the dollar. On top of that, we have a heap of infrastructure up at Sandstone, and I'll run through all of these in the coming slides. We've got a heap of infrastructure up at Sandstone. There's a heap of work that's been done, both because it was historically operating in terms of permitting and environmental, as well as studies to date to kick this off into production. We've got a project up to the north called Birrigan, which we have no resources on, but it's had, I think, 21 historical shafts and some high-grade production down there, and then some of the other assets, which I've already just touched on, and I will go into a little bit more detail later. The team, I won't go through all of this because we will take up the 20 minutes presentation, but just on myself, I'm a mining engineer. I'm 25 years operational and management and executive experience. My role before choosing to float Aurumin with the assets we had down at Southern Cross was manager of technical services at Northern Star, which means I oversaw basically the technical side of all the operations that were there, and pretty happy that contributed very strongly to that. Probably the biggest role prior to that was 8 years on and off at Mincor. We started around 8 mines during that time, between generally starting and acquiring and sort of ramping up, and grew that into $1 billion company as well. ESG, something we take very seriously. We support local where we can. Good relationships with our TOs down around that Southern Cross area, and we've done a huge amount to tidy up projects that we have. All of our projects are previous operators one way or another. There's no absolutely greenfields projects in this, although there's plenty of effectively greenfield opportunity. So we've done a huge amount of tied out work. Really, the crux of the matter, what we're working around now is our Sandstone Gold operations, and we call it operations because that's where we intend it to be, and that's what it has been historically. So 946,000 ounces in total. 881,000 ounces of those sit up at Sandstone, and they actually sit right on the mining lease. There's a 5 kilometre by 5 kilometre block there, right in the middle, and overall setting up for a hub and spoke operation. Currently, we have 2 satellite projects to Sandstone, one down to the south called Johnson Range. We've got a 65,000 ounce resource down there, and we've got a project up to the north called Birregrin. It's already touched on a lot of high grade, small scale production up there previously. Infrastructure we'll talk about on the next slide, but definitely focused on critical mass for production. So large open pit resource, but an even bigger underground resource, looking to add just a little bit more critical mass to the open pit, and then we'll try and kick it in the guts. Our resource table, I won't go through this in too much detail, but feel free to know that it's there, and anyone that's interested, I encourage you to go and have a look. Infrastructure that is sitting at Sandstone right now, we've got a 500,000 tonne process plant. It does require quite a bit of refurbishment work, but it's a far better position from starting from scratch. There's a known upgrade path there and studies done to take it up to 750,000 tonnes per annum. I think we can take it up to closer to the 1 million tonnes per annum, if not a little bit more. I think the leach train that's there at the moment, the tanks, we can split into 2 paths and put some additional tanks at the front to get the residency time up and still make use of the existing tanks, agitators, carbon scruns and everything that's there to get up to that. Either on-site infrastructure, really well set up for workshops, offices. We've got water bores in place, and these are all things that we keep licensed and functioning and continue to report on. We have some remaining tails capacity. On top of that, we have a large amount of tailings capacity in some of the legacy open pits that are there, and then really good roads all the way through site. The town of Sandstone is 15 kilometres directly north of the processing site, although it is within our overall exploration footprint. We've got our camp facilities up there. We've got about 170 rooms up there. Our exploration office and the airstrip at Sandstone for a dirt airstrip is absolutely fantastic. And then from Sandstone, we have Bitumen Road all the way down to Perth. Assuming you stop for a cup of tea or a bite to eat on the way, it's about an 8-hour drive. So certainly we're not up to Pilbara or anything like that. Relatively comfortable. And in fact, that Sandstone, that Bitumen Road also runs about halfway between town and site. And one of these days, I think when we're operating, we'll probably try and bitumize the rest. All of this leads us into a really good starting position. So it's not just the ounces. I think we're in a really good position to do something with them. In terms of improving, getting that open pit inventory up and going, we're underpinned at the moment by a few key resources and then a number of smaller resources. So 2 of those key resources are the 2 Mile Hill resource. There's a small pit mine there already, but we've got another 90,000 ounces sitting there at 1.3 grams per tonne. You know, depending on gold price, obviously we'll get somewhere between forward-looking statement, we'll get about 2/3 conversion on that if we use anywhere near current gold price. Shillington sitting down there, another 91,000 ounces down there at 1.5. There's a banded iron formation that runs through there, actually runs all the way through to the 2 Mile Hill intrusive structure that's there. I said another 90,000 ounces there, 1.5 grams per tonne, and again, we will mine most of that. Both of those pits will actually end up merging into one pit as we do it. They combine, so that'll be our largest starting open pit resource. Certainly some opportunity to expand there. Shillington, we'll put a couple of holes in there in the most recent drilling campaign. Pretty reasonable. Nothing that made the front page in terms of highlights, but still better than the actual resource grade there. So at some stage when we redo the resource towards the end of the year, there'll be a tiny upgrade there. Also then sitting around Sandstone as part of this overall resource package. So the red line here that you can see is our mining tenement package. We've got another 9 smaller resources there. There's another 127,000 ounces on the book. Relatively modest grade at 1.1 currently, but certainly more work to do, and none of those are finished. We did some work at Plum Pudding in our last drilling campaign. We came out, we reported a bonanza intersection there at 18 metres at 25 grams per tonne from 30 metres. which includes 2 meters at 215 grams, but it also actually includes 2 meters at 0 grams where there's a void, and there's some underground workings there that we don't actually have a good handle on the position of. We know there's been previous production there, but not exactly where. So that was pretty pleasing. And on top of that, we hit further down the hole another 7 meters at 1.5 grams per tonne. You can see a little bit of block model there in the picture on the screen, the green and the blue, and that lines up quite nicely with that. So the stuff up above, very pleasing. There's been some high grade there in the past. There is a north-south control, structural control went through there as well. So I think that's where we've hit that 18 meters at 25. And certainly not the result of just 1 or 2 nuggets or small bits of gold ending up in a small fire assay. There's some panning on the left-hand side there from that hole. So there's plenty of gold in that, and we would have got good results no matter which 30 grams we used in the fire assay. More work to do, and something we would expect to expand. Beyond that, our last drill campaign, we went out and we tested 7 new targets. We got really good results, or we got all grade intersections at 5 out of those 7. So these are the targets that we picked, all on the mining tenements, all on the mining leases, so easy to move along to production. And in terms of just adding to those open pit ounces, I was keen to add some new deposits into that. Good results at, like I said, 5 out of 7. So based on a combination of geochem and structural inter, extremely pleasing and super technically successful. And I think if we could go out and hit ore grade out of 5 out of 7 targets for basically first efforts anywhere, we should be very happy with that. 2 meters 11 being the highlight from Mount Clempt South, part of an overall north-south structure that also runs down from 2 Mile Shillington through a couple of changes in morphology, so it ends up down there at another interpreted intrusive unit. So plenty to do there. No shortage of opportunity here just on the mining tenements to hit our open pit target, and maybe we'll get to the Q&A. I'll discuss sort of what we're thinking in terms of that a little bit more, but plenty of opportunity. Further to the south, as I said, we've got a 65,000 ounce resource. This will certainly come in. There's a good road in place between Johnson Range and Sandstone. Currently, we only report that resource down to the top 100 meters below surface. Current gold price is certainly an opportunity to take that open pit further below that. So a good representation of what's down there and available. All sitting on the resource statement as inferred. Currently actually drilled out to about 20 by 20. We'll go down there to drill sometime in about the next 18 months just to confirm a couple of things down dip and really try and extend that deposit a little bit, and it'll kick over to indicated very quickly. Also sitting on the mining lease, we have a 573,000 ounce resource, 10.8 million tonnes at 1.6. So I said we're trying to build up that open pit inventory, but beyond that open pit inventory, with whatever we set up and build now, there's plenty of opportunity to continue the operation beyond that. So best hole we drilled through there, 352 meters at 1.5 grams per tonne. It looks like we're drilling down something, but this unit, that's actually a lithological unit. It's 90 meters wide, it's 300 meters long. Right now, this would be the equivalent of having a copper ore body sitting there running about 2.5%, except we don't need to go through flotation. We don't need to find an offtake partner. We don't need to get delayed payments, etc., out of copper, because it's all gold. So these holes actually drill through these stacked quartz veins, run somewhere between 3 inches thick and up to a metre. Some fantastic individual grades running through there. Generally, at the moment, we report this as a large diluted resource, but there's plenty of opportunity to tighten that up. Lithology runs, you can see the right-hand side of the screen there, you see the BIF outlined in blue. That's the banded iron formation that runs through there. That's how the lithology runs. That's how all the individual quartz veins run within the intrusive unit there. And you can see that further up around the top of the screen. You may or may not be able to see my cursor, my mouse moving up through there, but you can see we get this veining out into the mafic here as well. We get this grade out into the banded iron running on that orientation. You get that all the way through. In terms of down below, I'd also expect that we get further mineralisation outside of this intrusive unit, but just where holes have been drilled historically, we don't have that data yet, but there's still something huge there to do. 1,400 ounces per vertical metre. I'd encourage anybody that is concerned about grade to have a look at something like Red 5's King of the Hill deposit, where they're mining a large intrusive underground at fairly modest grade, and have a look at what their cost structure is there. And I think you'll see that this can work quite robustly. Massive difference between something that's big and bulk and chasing narrow veins left and right. And now we're about to step off the mining lease, Southern Johnson Range, which is the only bit we've stepped outside Sandstone so far. The mining leases themselves is 20 square kilometres. Effectively, it's a sort of 5 kilometre by 5 kilometre block with some corners cut out. But then we have another 521 square kilometres and another 230 kilometres in application. We have some large blocks up here on the left that look like they're out in the granite. There's actually some greenstone, we think, in the magnetics dragged into that. So we're pretty keen for all that to finish granting and get over that with some soil sampling. And then we have a huge amount of ground on the conventional sandstone, greenstone, and we think no shortage of opportunity. Sandstone as a whole has produced 1.2 million ounces, fair chunk of it through our processing plant there. And right now there's 2 million ounces of published resources on sandstone, which includes ours and our neighbours. A good example of what we think we have to go, but by no means, the only example. We've got this little area here just north of Bill China Pit. There's some historical drilling sort of right on our tenement boundary, 5 metres at 65 and 9 metres at 10. We've got some really good geochem signature running along the lithology, basically away from that, and represents drilling targets right now. These are all things we should be getting out and after as part of the next drill campaign. Yeah, a good opportunity to potentially add both more ounces and ideally a little bit of extra grade. As part of the next drill campaign we've got on sandstone as well, we'll head down to a little project called Dandaraga. There's a few small mines that have been operated there historically, reasonable grades up to 13.6 grams, but all small tonnage. We do have, it's a BIF target that we're down there and chasing. We don't report nuggets and things like that because we get into trouble with that on the ASX, but the picture of the BIF there, I'm happy to talk about it. The reason that picture of the BIF is in there is because there's free gold basically at surface, or there is free gold at surface because you can see it in the rock and it's been assayed. So keen to get down there and do some drilling, and again, hopefully add a little bit of grade. A bit of a no-brainer. We've got free gold on surface to go and put some holes, chasing it down into the ground. We're also going to head out to Birrigan. So this is the project to the north. It's about 70 k's. The road from Sandstone to Gidgee runs straight through this, so there's no access issues or anything like that. And in fact, it runs straight through the mining lease. So there's a 1 kilometre, one kilometre block up there. I think it's 21 historical mines that have been operated, grades up to 196 grams per tonne. Pellerin mine is the biggest producer there, which is a little head frame in the bottom of the page there, and there's stopes that sort of run an outcrop to surface along about a 300 metre strike there. All very small scale, but produce 2,700 tonnes at 50 grams per tonne. So drilling under those is a bit of an absolute no-brainer, and good opportunity to again add some ounces and a little bit of grade and keep those tenements in good standing at the same time. Again, granted mining lease, we pick up something here, it's something we can bring down to Sandstone quite comfortably. That represents the gold that we've got up at Sandstone. I'll just touch on a simple page here on the iron ore. This has been walked over by prospectors and operators. Troy Resources operated here, and then people, back in history beyond that. We've got a 6 kilometre discontinuous strike. We've got some fantastic iron ore grades. We've got thicknesses between 5 and 40 metres on surface, grades up to 65. We've got decent areas with grades consistently at sort of 65% iron. So certainly, meets the definition of above 62% for a DSO target. We've got Southern Geoscience working right now in terms of helping us on a exploration target for that. One of the great things about Sandstone, I said right at the start, there's so much extra work that's been done historically here. It's not just a greenfield site. So over this mining area, not only does it have magnetics, there's been a gravity survey conducted previously. So we're using both of those together, and then relatively cheap to get a model. Obviously, the iron, we've got surface SGs up to 4, massively different to the oxide material around it. So the gravity survey is quite effective in terms of plotting out what could be there. Sealed road from Sandstone all the way through to Geraldton, used every day for iron ore. There's guys in our camp that rented it in Sandstone that are transporting iron ore from Wiluna, from Wiluna West project through Sandstone. They stay there, swap trucks there. So definitely we're closer to port than that. And so iron ore guys, obviously, that we then talk to on a regular basis as well. Yeah, I would hope that we put out an exploration target in the near term. We'll see how well the modelling from Southern Geoscience comes up, and whether we report that or whether we incorporate a round of drilling before we report an exploration target. So close to some of the gold resources, we'd effectively be mining it in the open pits in any case. Quite close here to our Shillington. Again, I'm assuming you can see my cursor. Quite close here to Shillington. We pick up some of that high-grade material there. We've got our new 2 Mile West target sitting out here that is actually quite close. And then we've got our little our little McIntyre Ridge and McLaren deposits down here that are, again, quite close. McIntyre in particular has a really nice little pot of gold in there, and I think we'd be mining the iron ore at the same time, although they're not directly in the same place. They're quite proximal. So eventually, or not eventually, in the short term, we should be putting the iron ore into the same block models and reinterpreting our cutbacks. Yeah, we'll see with the exploration target. I think there's probably enough value here just about to support our market cap without the gold. And obviously, for a gold operation, we'll need to refurbish and rebuild the process plant. There's certainly more capital required for that than just a crush and screen. And that crush and screen circuit could eventually become the front end of the gold circuit in any case. So plenty of options on the table right now. Other value drivers, which I've touched on, and I'll skim through these slides without taking up too much time, because it's really stuff that we used to get rid of the con note and being corporately active last year. Iron ore transaction with Mineral Resources pending. Still trying to get a couple of tenements finally granted. There were some court cases last year that have left a whole heap of tenements in WA in a bit of a quandary, and we've got caught up in that, unfortunately. But we keep thinking we've got our way through that, and we don't quite get there, but they will definitely grant. So there's the payment there of 250 grand up front, 250 grand with the first PRW, another set of progress payments up to $1 million, and then $1 million per tonne. There's certainly some exploration down there. MinRes are going to use us to do the exploration on their behalf. So for iron ore, we do know what we're talking about. So it's our team that MinRes is going to use to front the exploration down here. They're going to pay us a management fee to do that. So again, the quicker we can get that done, the better, because we'll start generating revenue out of that, which should be certainly enough to cover our corporate costs, if not a little bit more. So certainly when we're looking at the iron ore up at Sandstone, it's not pie in the sky by any means. Mount Diamond mining tenements, the royalty down there was sold to Beacon, 2% on all gold above 12,000 ounces. Beacon recently reported a open pit resource on just the Lightning and Golden Slipper deposits of 50,000 ounces. There's a number of other targets down there, so that will continue to grow over time, and 2% on all other minerals, which is important, not by value, but just in terms of total number of ounces. There's actually about twice as much silver at Mount Diamond as there is gold. So we expect to get some revenue again from there in the not too distant future. And Mount Palmer down to the south here is the last of our assets at Southern Cross that we've used to trim down the portfolio. Cooler have earned into 51% of Aurumin, $250,000 of Cooler shares. To do that, they're spending a further $1 million to take it to 80%. Not something we could justify in terms of, do we spend money at Sandstone? Do we spend money down at Mount Palmer? We're obviously committed to Sandstone, but still great to have someone spending money down at Mount Palmer. And I think there's a lot of upside down there still to be realised. Anyone that goes to our public presentations can go through these a little bit more. There's the iron ore transaction. The Mount Diamond mining leases show some of the other targets and that are there on top of just what we talked about in terms of Lightning, Gold, Slipper, those resources. A couple of long sections showing they are certainly high grade, and which is why I think Beacon are pretty keen to get them into production. That'll be a nice top up for them, despite the fact the ounces aren't massive. There'll certainly be some good margins on that. And then a little bit more about Mount Palmer. So in terms of news flow, I think our Mount Diamond iron ore transaction completion is super close. We'll get that out. We've said we'll go drilling here at Sandstone this month now because it's ticked over into August. Final PRW required. That's actually been done since this presentation went out. We've got 2,500 meters. We're just waiting for the results of that iron ore work that Southern Geoscience are doing for us at the moment in terms of how we rejig that, because I'd definitely like to get some holes into that at the same time. We've got a larger air core program planned as well, 4,000 meters, to flesh out a couple of the new targets that we were successful in, some of that 5 out of that 7. We went with RC on the first round of all of those because where we have the banded iron formations, it tends to stop. So air core, but we've managed to pick up grade at shallow enough depth. A couple of those will go back now in air core, as well as some of the new targets, like on that 1140 area, will be out there with air core. And then there should be some other news flow, Sandstone iron ore progress, as well as some drill results coming out from Mount Palmer. So key takeaways that I can give is clear focus on building a mining company. We want to be in production. I said I'm a mining engineer guy. My background is starting up mines. I think I've started up half a dozen. I've fixed up probably about 10 at this stage. So Sandstone is well within that ballpark, or in our sweet spot, so to speak. Focused around Sandstone, we've trimmed the portfolio. Our standing value per ounce, I think, we're cheap. We're not even cents on the dollar in terms of the value that's there. Good board and management team, largely has done this before, and plenty of additional value other than just the gold. Thank you.
Perfect. Thank you, Brad. Very insightful. For any attendees with questions, by all means, put them in the Q&A chat below. I guess on behalf of myself, I've got a few questions. Firstly, what would you say Aurumin's assessment of the medium to long term of the gold price outlook is, and how does the business plan to position itself to benefit?
Yeah, good question. Oh, no, obviously not a financial forecaster. The name of the company is Aurum for gold and Min for mining. That's the origin. So, I'm a gold bull. I have a bit of an economics background as well. I think, we are poised for a much higher gold price than what we currently have. It's not something I can plan the business around, and it's, I try and take a conservative view on that in terms of the business. I can tell you last year, in terms of open pit optimizations, I was, and getting that critical mass for production, everything was focused around a $2,700 gold price. Then I used like a $2,200, so Australian dollars, not US dollars, 2,700 Australian. So we're, 3,700 Australian now. So $2,700 Australian would run the outside shells, the optimizations at around $2,200, because you want a margin on all your shells, otherwise you're mining the last bit for free, or for the fun of it. And that would usually spit out an operating cost of around $1,700 to $1,800. 250,000 ounces of that in terms of inventory ready to go would give me a free cash flow of $250 million. And I think that's something the market would support in terms of refurbishing the mill and getting going. There's a few other things been involved in this year and been trying to progress, so we haven't come back and sort of reframe that as a standalone, but certainly we need to reassess some of the project for that higher gold price, and I think we're closer than we were last year. I would certainly like to come back and do the next round of drilling on some of these new targets, and see what with those we can turn over into resources in the short term, and then feed that into a new model, incorporating a new financial model, incorporating the higher gold price. The people that had it before us, just in terms of reference, what should work and shouldn't work, Middle Island, using a $2,500 Australian gold price, effectively broke even on a feasibility. And they went all the way through to feasibility, which is one of the reasons there's been so much work that's been done there. We've, since that time, in terms of what's at Sandstone, we've added both grade and ounces to 2 Mile Hill and Shillington as key pits. We've brought in the Johnson Range pit, 65,000 ounces down there in resource to effectively add on top of that. And then we've got a bunch of new targets sitting there, which some of those will come across into resources. And then, of course, even little things like this at plum pudding that add to that picture. So we're certainly in a very robust position compared to that. and the difference between obviously $2,500 Australian and $3,700 Australian is huge in terms of margin. So yeah, trying to build up the last little bits I think we'd like to do. I'd like to say we're in position at the end of this calendar year to say what we're going to do in terms of putting into a feasibility and kicking that process off.
Yeah, very good, very good. Just regarding the Sandstone project, there's been a bit of noise and discussion from Brighton, Alto, and now Gateway as well. What does that mean for Aurumin and Sandstone, the Sandstone project in particular?
Yeah, so Brightstar and Alto are in both in trading halt for change of control transaction, which obviously aware that that's Brightstar, Alex Rivera there being very aggressive and having a crack at sort of trying to enter into the region. And then the announcement for Gateway, which is the guys that sit just north of our Buriram project up here and have a fair bit of that ground and quite a few of those yellow dots that are up there. I think the offer for Gateway have a market cap of 9.7 million. They've just been offered $14 million for the gold rights only up the north there. My understanding is that it'd be a hefty premium for Alto that are down here. I'd say, we've all been massively undervalued in terms of dollars per ounce. I think it highlights the low value that we receive on a dollar per ounce basis at Sandstone in general across the juniors as well. And then I think there's certainly, I'd like to think there's something further discussions to be had with parties in that area. We're still seeing a very strong position with the mining lease and the permitting and existing footprint of the process plant and tails capacity and all that sort of stuff that's value well just beyond our ounces. I guess, our first thing is always do what's right for the project and try and take it forward to production. And I don't think anything changes for that, but I think it just highlights the bigger opportunity in the region and how much it's undervalued.
Very good. There was one question I had before the webinar started, and that was around Aurumin's position for funding the execution of growth plans. I think especially at Sandstone. Could you dive into that pretty briefly?
Yeah, so good question. So I expect that we will, expectation is that we will be able to conduct the next drill program, cash in the bank and completing that MinRes transaction. Got a really supportive drilling contractor there, Top Drill, who we got drill for equity arrangement with, which drops out somewhere between sort of a third and 2/5 of an overall drilling cost. So yeah, we'll do that. But I guess like most explorers, we will be back to the market at some stage to top up.
Very good. All right. Well, perfect, Brad. Thanks for your time today. A reminder for our attendees that this webinar recording will be put on our YouTube channel. And yeah, very, very excited to see more faces in future webinars to come. But thank you very much for your time today, Brad. It was very insightful.
Thank you, Harry.
Perfect.